following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means you can take action. You have many great ideas on your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials down 33. NASDAQ up 57. S&P's up 4.5. Gold contract down $7.10, trading at $12.71 an ounce. Silver down 3 cents, $16.29 an ounce. Light sweet crude up $1.15, $66.22 a barrel. Notes and bonds. You get the 10-year note. Down 7 ticks, 119.20. 30-year bond down 20, 143.15. King dollar down 13 ticks, 94.716. Euro is 115.84 to 1 US dollar. The yen is trading out here at a price point of 110.39 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the FANGs, folks, they are all at highs. If we start out with Facebook, what you're going to see out here, and this is what's driving the text, there's no doubt. Facebook up 452. You're trading at 201.98. That's an all-time high. We take a look at Amazon. Amazon's up $16.94, $1,751. That baby is at an all-time high. Google, bottom line, went to the high, and Google looks to me like this is going to be tapped out for Google. Google can't get into its high from the January 29th. That was 1186.89. We got to 1186.28. Bottom line, you get 1.1 million. You're going into 1.3. That's the top of the consolidation. This is quite a consolidation on Google. Google, the top is 1186. The lows of the consolidation is 980. Now, what Google had done, and this is what's pretty cool, Google was one of the first tech stocks that actually came back and tested the February 9th swing low. We had that high volume swing low. You know, these other tech stocks, bottom line, have not tested that low yet. That bottom line brings more risk to those other tech stocks. Netflix, we take a look at Netflix, same thing. Netflix is finishing up an ABC structure on the way up. Netflix is up by $12 right now. You're at 417. Big numbers out here. That's the bottom line. The composite is at an all-time high. That baby's up $62. If we take a look at the NDX 100, what's driving the NDX out here today, you get Fox. Fox is up 7.4% at 333, and you get Fox A shares and then Fox. They're both up. They're both, it's 21st Century Fox. They are going to be selling out to Disney. Market likes it. The third waiting inside that NDX is that you got Walgreens. Walgreens is up 5%. Bottom line is that they're kicking GE out of the Dow Industrials. Now, it's going to get intriguing with GE is this, folks. So this is how this works. GE is out of the Dow Industrials as of Tuesday. Bottom line is that what you had, let me see, just I wanted to remove, I believe it's Wednesday morning, so they got to sell it Tuesday night. Okay, the change will take effect prior to the opener. Oh, next Tuesday. No. Okay, so it's gonna be Monday night that it's gonna be a problem out here inside GE. So what you had inside GE today, it's hard to comprehend why anyone would buy GE today. But guess what? At the open, they did buy it. They bit on it. They got GE up to $13.11. And this is going to be a heavy-duty toasting, folks. The reason being is that all the funds that own GE, bottom line, they're going to be out of it Monday afternoon. Tuesday morning, different ball game. Tuesday morning, we're talking about Walgreens and GE's out. And that GE being out, that is just a huge amount of selling that is going to be done in GE. Now, the real question is going to be, who is on the other side of GE buying it? Well, when we take a look at GE, we've been looking at this for a long period of time. GE wants to go test the highs of its low. And the highs of that low, you know, since we've been doing this, it's hard to comprehend that it's actually here right now. It's $11.35. Now, what you're going to get is this. You know, so GE started out at $33 going back to a couple of years ago in July. Your high volume low has been hanging out here since 2009. The low is 572. There's a lot of volume there. There's 5.9 billion shares on a monthly basis. So that being said, normally that would be very hard to basically get anywhere near that volume. That being said, guess what? You will be able, the volume is going to expand dramatically Monday. We're going to see it, how it's going to come down. Bottom line, what I do expect, the 1135 will get hit. We'll see whether that's a rejection of price at 1135. If you get volume and you get into, let's say we get into about $10, oh man, 572 will be coming at you. The further you get into that bar, more likely that, guess what, it's coming right at you. And what I do expect, what you're going to see here, this is going to be, they're going to have to move subsidiaries, and they're going to have to move them so fast it's going to be unbelievable, because now you've lost the support of the amount of funds that are not only in the Dow Industrials, mimic the Dow Industrials, all of the above. Big problems out here. Some of the other high volume stocks out here we have today, you have Advanced Micro. This is going to be cool. Advanced Micro comes out with their numbers after the close. We'll go through that. Starbucks is down 10%. That's trading down 560 at $51.82. SBUX. We go take a look at Starbucks. What you're going to see here, this is very close to, oh, it broke it. Okay, so this broke a major consolidation, folks. This is trouble in paradise for Starbucks. What you're going to see is that Starbucks had been in this formation, bringing you all the way back to 2015, and you are ripping it apart with volume. That's going to set up a Starbucks, let's see, 52, yeah, it's 40 bucks, 45 bucks, man. You're at 51 right now. There's not going to be much that stops this. And if you want to see the aspect, this is such a classic too. If you want to see the aspect of consolidations, highs versus lows, with our man, Mr. Bud Rolfs, the channel master. Bottom line, when you see how it hit the top of the channel at 63, no volume versus the bottom, this has been building cause for 3 years to break down. And break down, we have it. Stay right there, folks. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at Oracle. Oracle also came out with numbers last night. So Starbucks came out with numbers. Starbucks wants to run down to the $40 level. Oracle, problem child too. Oracle's an ABC structure on the way down. You're down $3.29. You're trading at $42.98. You got monster volume, blowing out 49 million shares volume. And we take a look at this, and what you're going to see, you have it on the daily, you have it on the weekly. The A point on this is approximately 53.50. Your B point is $44, so you get about $9. That's going to bring you into about $39. That's where the baby is set up right now. So bottom line is that this, put this on a monthly for a second. So $39. It's not the end of the world. It's where it broke out from February of 2017. If you get volume, though, bottom line, if you get volume on the move, which we have now, we'll see whether you get volume on the move when you compile the weekly and the monthly numbers up. What's going to happen is we're very close to breaking the whole uptrend that started out here, going all the way back into the price point of March of 2009. So that, no doubt, is going to be a big number. Yeah, one of the Tigers is saying that up in Canada, Trudeau says marijuana is going to be legal, recreational on October 17th. And if we go to the, if you want to see something, if you want to see how that is moving the markets up there, I believe this is an all-time high, and it's going to be inside the composite of the TSX. It's going to be the marijuana stocks that are actually moving this up. Yeah, so the all-time high is 16. Let me look at this for a second. Make sure I got, yeah, it is. All-time high out here, 16,421. And we've hit 16,441. Bottom line, big number. If you look at Canopy, right now, Canopy is the largest marijuana grower or seller out there. That's trading $44.49. And now that's going to be recreational, look at these numbers. The numbers that these people are projecting are pretty intense. Well, if you go to Canopy, Canopy in 2016 was taking in $12 million a year. 2018, $80 million a year. 2019, $314 million. That's quite a expansion topside. And what Canopy had done, which is really smart, they've done a couple different things. They got Constellation Brands, which is one of the largest booze companies, to invest in them. Smarter yet, though, is that they didn't come into the United States whatsoever. Because what has happened in a few of those Canadian companies, that they came into the United States, the smartest part was to stay out of any jurisdiction where it's illegal. And Canopy did that, and it's going to pay off because of it, because there's plenty of other places where you have medical marijuana in the world and recreational marijuana. So bottom line is that I wouldn't be buying Canopy right now. You know, the thing that is sad about how this thing ran, it ran from April 10th, got down to a price point of $23.88, and had that high volume at $20.85, $3 lower. Bottom line, never look back. And now what you had a high volume high at this $44. You know, we know they love to get tested. Bottom line, high volume high, it gets tested, and guess what, folks? It's getting tested with volume. So that sets up a whole new dynamic. And when you bring this back, if you want to see something that's wild, and I remember, you know, that the CEO is at some of these traders expos. Bottom line is that it was a $3 stock 2 years ago, $3 stock. Risk was out there, though. There's no two ways about that. Some of the other higher volume equities out here today, we have, we went through, Snap is down 46 cents. You get Twitter up $1.17. And if you want to see something that's pretty wild, TWTR. And this is where anyone who believed in Jack Dorsey, bottom line, you've made a fortune, because Twitter and Square, folks, have doubled in price in 1 year. Bottom line, doubled, 100% up. And they're both 100% up. If we go back to, here it is right here. So we're in June. I go back to June, is a $16 stock. Twitter, it's even more than the double. It's 46 right now. Square, SQ, Square. Okay, we take a look at Square. Square is trading $67, and you have Dorsey is the CEO of both of these companies. Oh yeah, both of these. That ain't even close. They're up more than 100%. Okay, so check this out. 100%. Square is up 200% in 1 year, and Twitter, there we go. Twitter is up, yeah, almost 200% too. 40, yeah. Twitter's up like 180%. Monster numbers. Monster numbers. No doubt about that. Huge. Tesla. Let's go take a look at Tesla over here. So Tesla trading up $9, 361. That looks like it's got a turnaround, yeah? So Tesla was down yesterday. We get down to a price point of 346. Bottom line is that it's at 362. Your short position out there is still 3.84. 39 million shares shot out of 169. That is some heavy numbers, folks. There's no two ways about it. After the close out here today, let's see what we got. Let's go to Micron. Micron's coming out at 4 o'clock. Micron is trading $59.45. Okay, so yeah, Micron had a high volume high at 63.42. That's from the 13th. Oh, we tested it. Okay, so we tested it with 84 million versus 142. Okay. So Micron, I mean, that looks like to me that Micron can back off a bit. You know, you had the high volume high, $63.42, 142 million. You tested that May 30th with 84 million, so 84 million versus 142. It doesn't look like it really wants to hold price out here today. So Micron, that's going to get intriguing to see where Micron comes out. Micron, they are looking for big numbers. They've been doing some big numbers. Micron is looking for a gross revenue of $7.8 billion. Big, big numbers. Some of the LRCX, let's go take a look. So Lam Research, as well as AMAT LRCX. Those are two in the chip sector that, you know, basically topped out, Lam Research topped out at 234 March 13th. You're trading 174. And this is a divergence inside the chip market, no doubt. AMAT topped out in March 12th, $62. That's trading 48. The AMAT one's really important. The reason that AMAT's important, folks, is that the way that AMAT builds the factories and has the equipment inside the chip factories. The way that AMAT normally runs is this, is that when chip factories get busy, it takes a long time to build a chip factory. So AMAT gets the orders year and a half prior to what's happening. So it's important watching AMAT, because if AMAT looks to me like it is breaking down, that is saying that, you know, bottom line, we get a lot of chip factories, and, you know, every time that chips are at high prices, they claim there's not commodities anymore. They're commodities, folks. Stay right there. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have the Dow Industrials right now down 2, Nasdaq's up 65, S&P's up 8. Let's go take a look at this. I'm going to bring this stock over here for a second. So this equity here, it's called Brainstorm Cell. Let's see. Let me get this thing. Okay, Brainstorm Cell Therapeutics. It's a biotech company developing adult stem cell therapies for Parkinson's disease, for multiple sclerosis, for Lou Gehrig's disease. The low's 288, the high's 535, And what you're going to see here is 12 employees. They haven't made any revenue yet. What the thinking is that in the second quarter they're going to take $1.5 million in. The thing that is going to be wild, and we're going to be hearing about this, folks, okay, because this is how this is shaking out. So, it'll be wild how this is going to work. So what has happened is this. A small biotech company may be the first to offer dying patients unproven drugs under the new law called Right to Try that deregulated access to such experimental treatments. Brainstorm Cell Therapeutics would charge for a therapy it is developing for the deadly condition known as Lou Gehrig's disease. While the details are still being worked out, the company's chief executive pointed out that bottom line is that they think they're going to charge $300,000 for this treatment. His quote is that companies cannot be NGOs, the non-government organizations that help provide care to impoverished countries. Brainstorm CEO said in a phone interview, we have to have an incentive. If they decide to proceed, Brainstorm, a company with no drug on the market yet, no revenue, would introduce a profit motive into the effort many expected to be altruistic, adding more controversy to the already contentious debate. Small drug makers, where much of the innovation in medicine originates, can't afford to provide their compounds for free, and terminally ill patients with no other option may be eager to pay for that access. There is little protection for patients already grappling with the this time in their life, because there's zero time left. That's what this comes down to. Health insurance typically don't pay for treatments that haven't been approved by the regulators or proven to work in clinical trials. That means patients would have to pay for the therapies out of their own pocket. Bottom line, folks, we're going to see the aspect. We're just getting hit by lightning. We're going to see by the aspect, I'm not saying this is one of the stocks, by the way, but we are going to see in this biotech arena, next 3 or 4 years, you're going to see the pump and dump coming out here in a big way. And we'll see how they try to regulate it. Because you can imagine you know that you're dying, whether you have money or don't have money. If you have money, the bottom line is that, you know, you're going to say, okay, well, how much is it? I'm going to buy it, because guess what? It's an easy sell, right? That's the other side of it. So I suspect we'll be out here in the next couple of years seeing some of these stocks implode, seeing scandals unfold, seeing unscrupulous companies basically taking advantage of people in like a huge way. Stay right there, folks. Come right back. We have the Dow right now up 66, Dow flat, NASDAQ up 66, S&P's up 8. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of tfnn.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of tfnn.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now, down 9. NASDAQ is up 63. S&Ps are up 7.5. If we go inside that Dow, strength versus the weakness, point-wise, what you're going to have out here is that putting juice into the Dow Industrials. You got the Boeing putting 14 points in, Disney putting 8, Microsoft 7. Taken away from it, Travelers is the big number out here today. Travelers is putting 21 negative points. Big Mac putting 15. You got IBM putting 7. Let's go over into the commodities market. We take a look. We had the oil numbers come out this morning. Oil right now is up 1.77%, $66.22. The amazing part about this, folks, is that the actual the oil number, the draw was good. The draw was 5 million barrels versus 2. That being said, what you had is that the gasoline and the distills, which is the jet fuel, diesel, bottom line was up dramatically. Bottom line, you get the oil contract up $1.15. You're trading at $66.22. That wants to basically trade right up into this OPEC meeting, which is on Friday. So Friday, I suspect they already know what they're going to say. They'll meet. Bottom line, sent out a statement, and we'll see what's inside that statement. Thus far, it looks like that oil does want to trade between the $65 and $75 level. Silver, we take a look at the silver market. Silver market out here right now is down 2/3, 0.2%, down 3 cents. Silver continues to hold. Bottom line, you know, it's just holding by its teeth right now, meaning the $16.18. You're at $16.28. You're down here, though, and you get volume contracted pretty well. Right now, we've done 69,000 contracts. You're going into 83,000 contracts. Yesterday, we did 117,000 contracts. And what has happened is it has rejected lower price from yesterday, inside the range. Bottom line, it's going to be all about the dollar. Let's go over and take a look at the euro first. Euro out here actually looks like it may have bottomed out here at this 115 number. The last swing low was on the 29th of May. It was 115.10. We hit 115.37 today. Bottom line, we'll see whether it can get any juice. This has been a straight line move. As the dollar has gone straight down, the euro straight up, rather, the dollar's gone straight down. 124.14, we were trading at April 17th, and that also has been a one-way move. The yen in Japan, we take a look at the yen in Japan. What we have in Japan, bottom line, that's up 37 ticks, 110.06. And if we do go over to those markets, so the markets in China, they took smoking on Tuesday. Bottom line, Wednesday, you get a bounce out here. Let's go to Shanghai first. Actually, let's go to Shenzhen because that is the market that had the most amount of destruction. That took out its swing low from February 9th. It had monster volume. And so we went up 18 bucks last night. Bottom line, you get 16.9 billion shares. The high volume swing low is still 40 points higher than we are right now, that February 9th, the swing low. The February 9th swing low is crucial in all world markets, folks. What you're going to see out here is that the Hang Seng, that was up 0.7% last night, and that baby came into it, rejected it, and did have lighter volume. So, you know, we'll see how this shakes out with the Hang Seng. Hang Seng was coming into 5.3 billion shares. Yesterday, we had done 3.7, and we'll see whether they can get back inside the range. You know, when you take a look at this, when we pull this back a bit, you know, what you're going to see is that it failed at its high from 2007. Got right up to the high, got up to a price point of a 33,480, which took it out. Bottom line, that lasted all of 2 weeks. Came back inside the range, and of course, once you're back inside the range, it can be trouble in paradise. When we talk about trouble in paradise, if we go over to Goldman Sachs, you're going to see that when that Goldman Sachs could not hold the breakout area from 2007, bottom line, you're off this high by $50 right now. Goldman, it looks like, topped out in March, 275, you're at 227. What's intriguing when I'm bringing a lot of these equities up, actually, you can see how many have actually topped out in March. The real question is going to be, when does the NASDAQ, NDX 100, as well as the small caps top out? You know, bottom line right now, they don't want to top out. That's, you know, this Q's, short volume is 26 million, but you go into 40. A couple of these, you know, you get Netflix hasn't finished its ABC structure on the way up. Facebook, they're running that baby, and they're running it pretty well. The Facebook, let me just see something. Yeah, there's only 1% short interest in Facebook. If we take a look at Netflix, you get a 4% short interest. Amazon, 1% short interest. Google may be the next one that actually is going to stop backing off. And Google's not even, Google's 0.9%. I like the way that Google, though, has just tested this high out here today. This is a nice setup because it's been in this huge consolidation. And we've been in this consolidation, it looks like 6 months. Yeah, 6 months you've been in that consolidation. The top, it's a lot, well, $1,000, yeah. It's a $200 consolidation. Go back to the oil market for a second. If we go over to the XLE, when you're talking about large consolidations, XLE, you know, the top of the consolidation on the XLE is running out at 77. The bottom is 65. And XLE, even with the price of oil hanging high, doesn't look like it wants to do anything. If we go to ExxonMobil, we take a look at ExxonMobil. Same setup in Exxon. Exxon came off the highs at 89. You're at $80.50. And this has been in the same consolidation going all the way back since 2007. So if you're in an Exxon, you are banking on that dividend. The dividend, not bad either in the environment we're in. The dividend, 4%. So not a big, a decent dividend, actually. Verizon, well, VZ, let me go to Verizon. When you talk about dividends, you can go over to Verizon, it's a trip. Verizon's 4.9% dividend right now. Let me see how this has been shaken out. Yeah, that's a high-end consolidation. That's also been a consolidation since 2013, 5 years. Man, oh, man. Sideways move for 5 years. That is a long period of time. But guess what? You're getting paid for it, approximately 5%. So in this environment, the 10-year yield right now is 2.930. The high for the last 3 months is 3.11. Let's go a couple of the real estate stocks. Builders, Toll Brothers. Toll Brothers, $37.43. You get 2 million shares traded. Broke to a lower price out here. Let's see. Well, so 35 bucks has quite a bit of support. Let's go to Lennar. Take a look at Lennar. Oh, interesting. So Lennar looks like it's actually bottoming out. Yeah, I like the setup in Lennar. So Lennar is down from a high of 72. You're at 52. came into where we broke out in September of 2017. Yeah, this is a decent setup. We put this on a weekly, monthly rather. Yeah, Lennar's a decent setup. So the high of 2005 was 68. It broke that and went to 72. Pulled back into like 60, actually even 52 with volume. And then we tested it last month with lighter volume. First pullback had 116 million. Tested with 74. So that's not a bad setup. Now what you'd be looking for is a sign of strength. And where that's going to come from, folks, inside the whole building area in general will be these interest rates. If these interest rates stay flat, bottom line, they get juice. Home Depot, Home Depot has action. Home Depot is just laying at its highs. You know, the high in Home Depot, 207. Let's see the next time they're coming out with numbers. August 14th. Yeah, this is setting up to go after its high. This is a large consolidation. Low, highs 207, the lows 172. We go to Lowe's. We take a look at Lowe's. Home Depot's been stronger than Lowe's, there's no doubt. But Lowe's catching a bid also. Yeah, almost the same type of setup, actually. Yeah, it is. So Lowe's, we had a high of 108. You're at 98 right now. That still looks like it wants to go higher. Let's go to the financials. So JP Morgan. We take a look at JP Morgan. No juice. Okay, so the banks are still saying, folks, that rates are going lower. Banks are going lower. And the real question is that are they holding something in the bag? Are they holding the bag on something? What we take a look at JP Morgan. If you want to see how Starbucks broke down, how Oracle broke down, you put two channels up here, you're going to see that this has been pushing lows, the lower end of this channel with volume going all the way back to, well, it's only a year. I got this on a weekly. But each and every time it's down to the bottom of this channel, it has big volume. What we haven't tested yet is that February 9th, the week of February 9th, which is 103. You're 107.72. Let's see the next time that they come out with numbers. Oh, good, July 13th. What was intriguing about the banks, and when they came out with their numbers the last time, they had amazing numbers, biggest numbers they've had. Bottom line, sold them off. That's a heads up. We go to Berkshire Hathaway, and we take a look at Berkshire Hathaway. That is the largest weighting structure. Oh, look at her. She wants to break down right now. Okay, so Berkshire has two high volume lows. 188.62, that was from a couple weeks ago. 189.30. We've hit the 189.50 today. This could be a major breakdown. Let's look at this. Yeah, this is going to be, so, you know, we'll just see. It looks like Berkshire Hathaway inside the banking index very well could be the first one that is going to break down. You know, it's been trading here since January of 2018. You have the high volume low that hasn't been tested at 189.30. Look at that, 20 cents away from it. Holy cow. Well, actually, we had come down to it the week of June 1st, but that had volume also, so it wants to test it again. If Berkshire breaks down, let me pull this back. I want to see something else. If I put this on a monthly. Yeah, if you put this on a monthly, what you're going to see is that it looks to me like, oh yeah, we haven't broken it yet. We're teetering on breaking the trend that started in February of 2016. And if you break that trend line with conviction, wide price spread, accelerated volume, which we have the volume inside the Berkshire Hathaway, that had set up a 135 in Berkshire Hathaway, and right now you're at 189. So we're talking some action out here. We're talking, you get Berkshire breaking down, it's going to be why. Is it the insurance business? Is it the banking business? Is it the derivative business? If you remember Warren Buffett, I believe one of his quotes is that something about derivatives being mass destruction. The bottom line, he's one of the biggest buyers and makers of derivatives, folks, okay? Don't believe a word he's saying. 877-927-6648. Dow down 37, NASDAQ up 56, S&P's up 5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 39. NASDAQ's up 55. S&P's up 4. Volume-wise out here, we're going to have inside the NYSE, it's going to be light volume. We're at 516 right now. They'll come in around 750. Inside the composite, what we're looking at right now is you're 2 billion. Now, what's intriguing here in the composite is that, you're breaking all-time highs. This baby should really have some juice in it, and, it doesn't. I expect they're going to throw by maybe, well, we'll see if they can throw 400 million. If they throw 400 million at the close, then you get some action. If we're only 250, if it's 2.2 billion in the close, that's not a big number. 14th, let me see it, 14th. Well, what's intriguing here, as I say that, is that, let me put this a different way. 1 second. No, if it does that, you're probably going to small ABC up. It's a small one, but bottom line, you still get an ABC up. 7,600 approximately. No, it retraced too much, so it's not an ABC up. Inside the NDX 100, the Qs, what you're dealing with the Qs out here is that the Qs got to 177.98. So we've tested the high. Going to close underneath it a bit. Bottom line, we'll see how that shakes out. Small caps, they just they want higher price. Small caps out here, 16 million shares. Now that will put volume in at the close out here on the small caps, because that's how the small caps trade. We at 16.8 million right now. You're up $1.45. You're at 170, and we'll see what they throw into the close. What we also want to see what they throw into the close right now is the GDX. The GDX it looks like we're coming into the close, and right now we close to basically rejecting lower price. We haven't done it yet. The GDX would have to close 2203. We got light volume here, but 2203 would get that. Actually, 2203, 2202, right there. Stay right there, folks. Going to be coming back with some numbers after the close. Right now, we have the Dow Industrials down 44. NASDAQ is up 57. S&Ps are up 5. We'll come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. A presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We have the Dow Industrials down 42, closed down 42, trading at 24,657. NASDAQ up 55, 77.81, new all-time high. S&P up 5, 27.71. NDX 100, 73.08. All-time high. Gold contract down $7.60, trading at $12.71. Gold hit $12.70 today. You get an ABC structure down with a price projection of $12.67. Bottom line, $3 lower. See what kind of juice we have coming into that number. Silver down 2 cents, trading at $16.29. You had light sweet crude. We came out with the API EIA numbers this morning at 10:30. Bottom line is that you had a drawdown of 5 million barrels, up $1.15, $66.22. You get the OPEC meeting on Friday. Bottom line, we'll see what that statement has to say, but it looks like good old barrels of oil want to trade between $66 and $75. Notes and bonds. You had the 10-year note down 9 ticks. trading 119.17, 30-year bond off 25, 143.10. Both pull back with light volume once again. They want higher price, lower yield. King dollar up 36 ticks, 94.765. The euro is trading at 115.80 to 1 US dollar. The yen is at 110.40 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of Micron Tech, let's go take a look at it. Micron just come out with their numbers. Micron Technology closed today at a price point of $58.95. The low for the year is $26.85. The high is $64.66. Right now, we are trading out at $58.60. So bottom line, you get a flat market out here. Let's see what they have to say. Micron had net sales of $7.80 billion. Earnings per share was $3.15. Their gross margin is running out at 60%, 60.19%. What else are they looking for? Bottom line is that they get a flat market. That's the way the market's looking at it right now. Right now, you're trading right where you're trading 45 cents lower than they closed, but Micron's really laying out at these highs. So what's intriguing about Micron, and we'll see how this shakes out tomorrow morning, is that Micron had a high volume high on the 13th of March, 63.42, 142 million shares. It got tested on the 30th of May. Tested with 84 million versus the 142. That sets up lower price. So we'll see where the conference call comes and how folks are feeling about this in the morning. Some of the higher volume stocks out here. This is what we're looking at today. We had GE was the top one out there. Now GE, bottom line, kicked out of the Dow Industrials. They will be out of the Dow Industrials Monday night. Tuesday morning, they will not be in the Dow Industrials. You're going to have Walgreens inside the Dow Industrials. GE's traded down 7 cents. Pretty amazing. They did have some buy-in this morning. Bottom line, folks, do not touch GE. GE is going to be, well, $11.35 is the high of the low of 2009. Now that they're kicked out of the Dow Industrials, what does that mean? That means that the indices themselves, the diamonds themselves, in fact, let me go. I was just curious this way. 1 second. If I can actually see how this works. No, it won't work that way. Okay. I was trying to figure out how many shares. I'm sure I could figure this out, but not on the fly. How many shares just the diamonds had of GE? Because you can take the amount of shares that are outstanding inside the diamonds, you can take the weighting structure of GE inside the diamonds, and that'll give you an understanding of bottom line is that how many shares had to be sold. That's the bottom line. And that is only in the diamonds. That is not in all the Dow Industrial funds, as well as all the funds that mimic the Dow Industrial. So it's going to be a big number. Gold. Gold is at 1270. That's doing an ABC structure down to the 1267 level. Oil, 66 at 25.22. I suspect that's going to want higher price. Let's go over to the 30-year bond and take a look at the 30-year bond. So, notes and bonds right now, U.S. 8. Okay, so the 30-year bond closed down 25 ticks, 143.10. Did 227,000 contracts. It's not bad. You're still coming into the strength where it had 600,000 contracts. So this baby still wants higher price. If we go over to the TLT, the 20-year plus bond fund, let's see how that shakes out. Okay, so this was down $1 today, $1.06, 6.8 million shares traded. You're coming into 10 million as well as 21 million. That's still also saying that it wants higher price. King Dollar is going to be a wild card. King Dollar has been a wild card, is a wild card, and what King Dollar, it tested the October 2017 high of on the continuous contract 95,070. We'll see whether they can break it. Bottom line is that if we do break it, well, we did the test, okay? We already broke it, but it couldn't stay above it. Broke it, you know, bought all the 20, 30 minutes, came right back underneath it again. And if that's all she wrote, we're going to end up with a lot more, well, either way, we're going to end up with a lot of volatility. Because if we break it concisely, meaning the dollar index, then that's going to have some juice. I don't expect we're going to see that at this time, and this is why. When you take a look at the dollar index, what you're looking at is this. If I bring this back to 2014, what you're going to see is that the dollar index is coming into a monster supply line. And that supply line is pretty intense, because what had happened is that the dollar index had traded above this area from March of 2015 all the way over to July of 2017. That is one large supply line. So there's plenty of folks at that particular point that, bottom line, are sellers. What you do have also, and this is where I suspect the Federal Reserve is going to have to, keep their eyes on this whole deal, is that we have some implosions, meaning inside the currency markets across the world. If you go over to Argentina, you look at that peso, it's pretty intense, man. The peso right now is trading at 27 to 1 US dollar. 6 months ago, folks, it was 18 to 1 US dollar. Big numbers. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Direxion's daily CSI 300 China A-share bull and bear ETFs. China A-shares in either direction. Visit DirexionInvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at some of the higher volume stocks in this market out here today. As we said, GE was the highest volume stock. That baby kicked out of the Dow. Walgreens is going in. GE bottom line is fried. Micron, Advanced Micro. Advanced Micro was down 17 cents. You had 21st Century Fox. That was up $3.37. It looks like Disney is going to basically take that company over. Starbucks down $5.21. Starbucks got smoked, folks. You got an ABC structure on the way down. Big problems out here inside Starbucks land. So if we go take a look at Starbucks, what you're going to see out here is that you actually broke a long-term consolidation. You went down, a huge share volume down on the way down. 61 million shares were traded. And if we take a look at this, what you're going to see when you bring this back is that you broke a major consolidation. That consolidation had started in June of 2015. And this just ripped it apart. When I say break with conviction, conviction is wide price spread, accelerated volume. It had it in spades. This sets up bottom line, you know, down to like 40 bucks. You know, when we had started going topside in Starbucks, the last leg up, it started out in October of 2014. You were at $35. It was a straight line move. It went from $35 October 14th. In 1 year, it was at 64. Now, it consolidated and then just broke apart. And if you want to see, when we talk about channels, this was a major consolidation. The top of that consolidation was 64. The bottom was at 54. But you're going to see each and every time they went up to the top of that consolidation, volume died on the vine. Every time it comes down, it got heavier. Bottom line, what is that all about, folks? If you have my book, The Art of Time in the Trade, you know that is building cause. In this particular case, you can see that it was building cause on the way down. Why? Each and every time you came down to the bottom of the consolidation, volume expanded. This time, expanded too much, blew it away. The high volume low that it was going after, it was going after a high volume low from November of 2016. That high volume low, so check this out, on a weekly basis was 79 million. Well, guess what? It's only Wednesday, and we just broke that, and we already did 81 million. So that is going to basically take that apart. Next step down, and this is what's going to be really bizarre. The next step down, when you take a look at this, you're talking about we had a downdraft in August of 2015, and this tick is still laying out here. It's laying out here at 42 bucks. Well, guess what? That's where that baby looks like it's heading. So that huge problem. Oracle also came out with the numbers last night. ORCL. Oracle, also a huge problem. They unloaded this one in spades. Down $3.45, $42.85. Wide price spread, volume behind the move, another ABC structure on the way down. Already blew away the B point on a weekly basis. B point had 75 million shares. We just blew this away right now with 2 days left, 102 million shares. This sets up, I think it was a $9 A to B. Yeah, so this sets up, bottom line, 39 bucks. And if that just keeps coming down with volume, that also can be a big problem. Now, that's on the downside. Upside, guess what? Facebook, new all-time high. We take a look at Facebook. Facebook was up 451. You're trading at 202. We go to Amazon. Amazon also new all-time high, 1762. You get Google. What's going to be interesting with Google, folks, is that Google very well may have just rang the bell on this consolidation that Google's been in. Google got up to its high, the high that we're talking about. It got up to the swing high from January 29th, 1186.89. We got to 1186.28, missed it by 50 cents. Gave it up. Bottom line, you have the bottom of this consolidation that's 980. So it's a big number. Netflix, NFLX, what you have with Netflix, Netflix today traded up to a price point of $4.19. And I want to go into Netflix just for a second, because what you have with Netflix, I remember doing this, but I want to get the exact number right now. Netflix was an ABC up. And I just want to get the exact number on this because, okay, so your B point was a very large one. See, when you finish an ABC up all the way down, your probability goes a lot higher. That's the end of the end of the move for a short-term basis. So your B point is 333. Your A point was 178.18. which is 155 A to B. Your C point was 271.22. Okay, there she is. So your A to B equals C to D is 427. We broke, this is what we did. We had broken the B point in April of this year. Bottom line, we hit 419. I expect we're going to hit that 427. The real question is going to be when we hit it up there, what else is it going to do? It's going to be an A to B structure that is more than a 1 to 1.382. Because then if I do this little one up here, there's another little ABC, which is 350. Let me see this one here, too. This is pretty cool. See, this is when you know these things are strong, too, that when they do multiple ABCs, even if they're small ones, 398.86 would be a B. You get 356, 356.25 would be the A. It's only 42 bucks, but plus 386.50. That's cool. Okay, so the first one is 427. The second one, this is a small ABC, is 429. So bottom line, you can expect we're going to get into those numbers. That's how that baby is shaken out. Microsoft. We go to Microsoft. We take a look at Microsoft. Microsoft out here also right next to all-time highs. The all-time high on Microsoft is 102.69. You're at 101.87. And look at that. Oh, my God, what a move. So when we take a look at these markets in general, what's pretty intriguing right now, I believe the way that it's set up, because of the way that we have Amazon, Jeff Bezos, he right now is #1 richest man in the world. #2, I believe Bill Gates is still there. #3, and this was overtaken today, Zuckerberg just overtook Warren Buffett. And you get Buffett #4. I believe that's how Bloomberg is straightening them out. Let me just see if I can find that. They were running this, let's see. Yeah, that's all right. Can't find it just yet. Twitter, TWTR. No, this is you know, you get Dorsey running Twitter as well. He's the CEO of Twitter as well as the CEO of Square. We take a look at this. Both of those equities, folks, in 1 year are up over 250%. So big, big numbers. Bottom line, Dorsey owns 16 million shares of Twitter. And if we go SQ, we look at Square. Square right now. Where are you? I can't find them quick enough. Bottom line is that I'm sure the shareholders of both of those companies are very happy. Stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at Micron. So Micron closed at $58.98, and that is trading right now. It's only trading out 40 cents. It's no big deal. 40 cents, man, give me a break. These things have been all over the place. Inside the NDX 100, the strength versus the weakness was all about Fox. Fox today, folks, bottom line is that Disney's going to get a hold of Fox. It looks like that this thing is going to go through quick, too. Disney is close to winning U.S. antitrust approval for the $71 billion deal. The Justice Department is set to approve the deal as soon as 2 weeks, said the person who declined to be named because the investigation is confidential. Fox and Disney agreed to a merger to sell assets, including Fox Regional Sports Networks. The approval could clinch Disney's takeover of Fox amid its battle with Comcast for one of the media's industry's biggest prizes. There's no doubt, man. That library is worth a fortune. Fox on Wednesday accepted a sweetened bid from Disney, which upped its offer following Comcast's $65 billion bid last week. The $38 share price is about $10 higher than what Disney offered in December and $3 above Comcast's bid. Imagine $10 a share above. It's pretty amazing as how these companies basically bid out or start their negotiations. The Justice Department, let's see, Disney and Comcast have traded jabs over which bid would face an easier path to regulatory approval. I suspect there's no doubt that what you had here is that because the Justice Department had just lost the AT&T Time Warner bid, bottom line is that this is going to be a lot easier to do than it would have been before that. If we go take a look at Disney, Disney right now is trading at 107.15. Disney, let's see. So Disney right now takes in $59 billion. And let me put this one over here for a second. Oh, okay. Fox. Let's do that. So Fox is at 48. And I'm not sure which. So $59 billion, and now they're not getting all of Fox because they're getting the entertainment part of the cable networking. I'm not sure if it's cable networking. Bottom line is that it's going to be a big number. The thing that's going to be intriguing. Let's go to Comcast, CMCSA. So Comcast, oh, they're monsters too. Look at that. Comcast takes in $89 billion. So even with this is interesting, man, because if Comcast had ever got Fox, actually, they would be a monster, because it looks that revenue-wise, Comcast has taken and still will take in more than a Disney and a Fox combined. That's what it looks like. You know, Comcast traded down at $5 in 2009. You're at $33 right now. When we take a look at I guess the difference, and no doubt, is still going to be the growth aspects. But Comcast is still growing by 7%. If we go take a look at Disney, that's 7% in the USA. We take a look at Disney. Disney's growing by 4% in the US, flat in Europe, 9% in Asia. That's going to be China. That's a big number. And then we go to Fox, and we take a look at Fox. Okay, so they're growing by 5% in the US, 3% in Australia. Oh, look at this, though. They're getting hammered in Europe. They're contracting in Europe in a huge way. I think maybe that's because they pushed off Sky Networks. I think that's how that's going to be, because what you have there is that they have a negative 31%. And what does happen with those numbers, folks, is that if you sell bottom, you sell it off. That's where that can go into a negative aspect. So not the end of the world. What we did have up in Canada today, Trudeau announced that on October 17th, I think. Let me see. If we take a look at Canopy, Canopy's at all-time highs today. It was up $2.83. This is Canopy Growth. This is one of the largest medical marijuana companies that are going to be actually just a marijuana company in general. October 17th. And what did happen, folks, in Canada today, their indices went to an all-time high. The thing that's intriguing now, if you want to see how currencies can affect indices, the Canadian dollar's got smoked. You know, so right now, so watch this. You're at an all-time high, 16,420. And we take a look at this, right? That's in Canadian dollars. Now watch this. If I make this into U.S. dollars, it's not even close. You know, on U.S. dollars, you're talking about you're at 12.2 versus 13.2, because the Canadian dollar right now has been getting weaker in an extraordinary way. We went in the last 5 months to 121 to 1 U.S. dollar to 133. So that Canadian-wise, right, bottom line is that if we're using our U.S. dollar and you go to Canada, you're going to get quite a deal. They're going the opposite way. They're going to get have some problems. Let's go to Warren in Denver, Colorado. Hey, what's going on, brother?
How's it going? Those marijuana stocks, man, in Denver, Colorado, of course, we're the locus of that stuff. It really increases the economy just in general, wherever that occurs.
Yeah, no, I can see that. You know, it's going to be intriguing in the aspect of what happens in the United States is that because you guys were first, and there's a couple other states, right, that, you know, Colorado, Washington, right?
Right.
You know, you, of course, have all the tourists coming in. Then you have all the buying that's in there that's getting shipped out all over the place.
Well, there's just money in circulation. It causes money to go into circulation because it's a cash business here. I'm not sure it'll work that way in Canada.
Yeah, no, I can see that. It's a cash business. Yeah, that's going to be intriguing to see what happens in Canada. That's right, because even here, now in Florida, they have medical marijuana, but even in medical marijuana, it's a cash business. So
cash always.
Yeah, because of the bank. So we'll see what happens when it's legal up in Canada, man. I wonder how that's going to work with the banks. You know, it's interesting, too. Tommy and I bring this up this morning, folks, as to what's going to happen with there's a treaty inside the G7. Canada's a G7.
Right.
And supposedly inside that treaty, you know, no one's supposed to basically have recreational marijuana. Well, guess what? That's done now. So we'll see.
That's kind of shot down by Portugal and Switzerland, if you ask me.
Yeah. Yeah.
Anyhow, I wanted to ask you about a different stock, completely off this topic. It's Barclays Bank, BCS.
Okay, so let's take a look at it. We get Barclays. Okay, the low for the year is 9.29. The high is 12.55.
I wanted to see if you think it's going back to June of 2016 Brexit lows. That's kind of, I've been watching it since it was in the 12s, and now it's down to the 10s. And I think it's going back to the Brexit lows of June 2016. You're good at pulling up these past charts, kind of these.
Yeah, just stay right there, Warren. We'll be coming back with Barclays. Our phone number, folks, is 877-927-6648. We had the Dow Industrials finish down 42, NASDAQ up 55, S&P's up 5. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We are talking with our man Warren from Denver. We're talking about Barclays, BCS. And what the question is that you get Brexit. The Brexit was out here, folks, and the bottom line is that a lot of these equities got toasted, and they got toasted very quickly. And what the question was, is it going to go back to that low? Yeah, that June low of 2016, Warren, is sticking out like a sore thumb. And so what gets intriguing here, folks, is this. You know, I talk about GE a lot and have for, you know, a few years right now. And what you had with GE, so when you have these bars, you get the higher the bar, the lower the bar. And the further that you go into the bar itself, the more probability is that you go to the lower the bar. And with Barclays, yeah, you're at 1036. The top of that bar is $11.19. The bottom of the bar is $6.76. So it's like, okay, that's game. That is game, man.
Okay. Well, I mean, and then my other question is, do you think it can go all the way out of business? Like, I remember you doing Washington Mutual on the air one time or two times, and Washington Mutual just ceased to exist, and it was kind of in the same level.
Yeah, I don't see that happening. The reason why is that what ends up happening with Barclays is that you'll have the, UK come in and save it. It's just too big, man. It's just too big. Yeah.
It's actually a big shareholder in the Federal Reserve because the Federal Reserve is really a corporation.
Oh yeah, well, that's
they took a lot of shares in when they took over Lehman.
Okay. Yeah. And you know what is intriguing about Barclays in general is that it seems that every time that the Barclays gets a CEO, folks, they can almost do, well, most of the banks can almost do anything. But bottom line is that, they go from one company to another banking company to another banking company, and they're hooked in. They get the Rolodex. That's the bottom line. This thing's been around forever, so.
Okay, well, thanks a lot for doing that for me, Tom. I really appreciate it.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Yeah, if we go over to Deutsche Bank, so let's look at this. Man, Dave White's telling me they just got fined again. So Deutsche Bank, let's see what we got here. In fact, what had happened is that, so here we go. 205 million over currency trading violations. What has happened, folks, and has happened for quite some time now, right, is that the banking structure, what they have done is that they have just taken all these fines, because it's hundreds of billions. It's not just millions. And that's part of their overhead. That's the bottom line. That's how they look at it. That's part of their overhead. Now, Deutsche Bank, okay, bottom line is that we, when Warren just asking me about the aspect of Barclays, Deutsche Bank, now this baby, we will be reading about this baby, and I expect that, the German government is going to have to come in and bail them out. Because what we have here inside Deutsche Bank is a mess. I mean a mess. We bring Deutsche Bank back. Deutsche Bank in 2007 was $125. You're at $11 right now. You have a high volume swing low at $9.95, which is going to go after. And the real question is, does it go after it and blow it out? You go after it and blow it out, it's got big problems. When you take a look at it fundamentally, they basically retrenching in every area they are. They're contracting by 4% in Germany, 10% in America, 4% in the United Kingdom, 6.5% in Europe, 5.5% in the Pacific. So they basically, contracting, and they're contracting very quickly. What no one knows, and that's what happens with these large banks, is that you don't know who's holding the paper on the other side. If you remember when Lehman went down, the way a bank goes down is this. You have repos. Repos, folks, overnight, that's how banks basically stay alive regulation-wise. Okay, all it is, it's a book entry so that the books are straight at the end of the day. You're a bank, I'm a bank. I need some money at the end of the day to keep the regulation clean, because you've got to remember something. They can leverage themselves. You have $1, you can leverage yourself up to $10 legally. You still have to have the paper behind it. So that's where the repo comes in. What ends up happening with a repo is that you expect to get that money back in the morning. When Lehman went down, that's when banks would not lend to them overnight. That's the bottom line, okay? We will see if that's what is happening. I can tell you from looking at the financials, okay? Just look at this. Here, this is a beauty. If you remember Warren Buffett, his quote was that derivatives are the weapons of mass destruction. What he didn't say, maybe when he said it, he wasn't there. What he didn't say is that he owns lots of derivatives, folks, okay? Bottom line, he might have said that, but guess what? When you look at Berkshire Hathaway right now, Berkshire Hathaway is breaking down. You had high of Berkshire Hathaway at 217. You're at 189. This is the largest weighting structure inside our XLF. It's the weakest stock. We go next to J.P. Morgan. Picture this. The banks are making a fortune. The spreads should be working for them, but the spreads haven't worked for them because of the fact that the Fed Reserve have gone up on short-term rates. But what has happened is that the market itself is buying notes and buying bonds. So the spread is staying tighter. We go look at JP Morgan. JP Morgan, guess what? Each and every time, and if you want to see how, let me put this on a monthly actually. If you want to see how Starbucks, I'll put it on a weekly, how Starbucks broke down, how Oracle broke down, guess what? This is a classic. And what you're going to see is that when you take, if you take these channels and you put the bottom of this channel together with the top of this channel, you're going to see that each and every time you're at the top of the consolidation, which is $117, you had volume contract dramatically. Each and every time that you're down to the bottom of it, which is 103, volume explodes. That's building cause to go downtown. And what hasn't happened yet is that we haven't tested the February 9th high volume low of 103. We break it. Listen, it can test it with light volume, reject it, and it goes higher. No big deal. You don't reject it, see ya, don't want to be ya. And actually, when I start looking at this, I'm glad that actually Warren called, because when you look at the aspect that if we were just talking about interest rates, banks should be a lot stronger right now. The real question is, and let's bring a few more of them, if we bring up Bank of America, the real question is, why cannot banks get going to the upside? Well, one of the main reasons could be that they're holding bad paper. You know, bottom line, you take a look at Bank of America, same type of setup. And of course, unfortunately, there's plenty of folks that never thought they would ever see GE, number one, at a price point of $12.88, number two, getting kicked out of the Dow, and number three, in the future, what I expect is that good old GE very well may go test the high volume low of 2009, which is $5.72. Guess what? That's what you have, you know, and you're talking about GE. And guess what? What that's all about, folks, somehow the market has sniffed out, and has sniffed out for a long period of time, the legacy issues, the issues that GE was a bank, the issues that GE is on the hook for huge amounts of money, even when they sold the businesses. Stay right there, folks. Come right back. We had the Dow Industrials finish down 42, NASDAQ up 55, S&P's up 5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, so this is going to be quick. Tonight, okay, what you want to watch for tomorrow morning, actually, and this is a big heads up because what you're going to see out here in Europe in the morning, Daimler Chrysler, okay, so this is where understanding where equities are actually trading, and we can get a jump on this. Daimler Chrysler just came across the tape, and what they said is that they have just cut their forecast for the year. And the reason they cut their forecast for the year, folks, was tariffs. Tariffs going into China, because there are a lot of Daimler Chryslers made in the U.S. Bottom line is that they're going to be going in. Bottom line, they're going to lose money. They're going to make less money. Not going to lose money. They're going to make less money than last year. Daimler just went from 76 euros down to 60. Daimler's going to break a B point tomorrow, and it looks like it's going to have some volume behind it. So that's going to put a hurting inside the DAX tomorrow morning. Then what you have, so watch this. Let's go over to the DAX for a second. If we take a look at the DAX, because, of course, in the DAX, who's the monster in the DAX? Well, Volkswagen. Bottom line, Volkswagen today was up 2 euros. Bottom line, Volkswagen has also had a huge problem out here. It's down from 195 euros to 154. Volkswagen also looks to me that, guess what? You are going right after these lows. So tomorrow morning, car companies in general are going to have a big, big problem, folks. So buckle up. I mean, buckle up big time, because, you know, you never know where these babies are coming from. In this particular case, though, we do. You know, our markets are still open. Futures markets are still open. You'll see our futures move around in a big way tonight, because what you do have, the big car companies, if Daimler come out, it's a material aspect. They expect to sell less. Volkswagen will be next. Guess what? We go over and we take a look at GM. Guess what? We're going to see it, folks. And this is going to be fast and furious. GM right now is trading at 42. That baby's up at all-time highs. But guess what? It's a consolidation. And anything... Oh, it's 10 cents under the consolidation. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.